Stock Talk listeners, welcome back. Great to have you with us for another deep dive.
Yes, hello everyone.
It's Monday, May 19th, 2025, and we're jumping straight into the essential stock and market news you really need to know today.
We've got a mixed market trends, some big corporate plays,
Hmm.
earnings, IPOs on the horizon.
Exactly, all based on the latest reports. If you want this kind of analysis regularly, do make sure you subscribe to Stock Talk.
And maybe share with friends or colleagues who follow the markets.
Please do, and hit that like button if you find this helpful. Okay, let's kick things off with the overall market picture.
Right, so the first thing catching the eye is that stock futures are dipping a bit this morning.
And the reason seems pretty clear.
Yeah, Reuters is pointing to that Moody's downgrade of the U.S. credit rating late on Friday. That kind of news tends to make markets a bit nervous, understandably.
Definitely inject some caution. And speaking of economic signals, we've got some important retail earnings coming up this week.
Oh yeah, the big ones. Target, Home Depot, and Lowe's.
These are always significant, but maybe even more so this time around.
I think so. What's really interesting, as Reuters highlights, is how these earnings might show the real-world effects of tariffs.
Right. Didn't Walmart already kind of flag potential price hikes because of tariffs?
They did. So listening to what Target, Home Depot, and Lowe's say about costs, prices, and consumer behavior, it's going to be, well, very telling. Are they absorbing costs, passing them on?
A crucial test for consumer strength, then. Okay, let's shift gears to some major corporate news. A big consolidation happening in the cable industry.
That's right. CNBC is reporting that Charter Communications is set to acquire Cox Communications.
And the price tag.
A hefty $34.5 billion. This would create just a massive entity. We're talking 38 million customers across 46 states.
Wow, that's huge scale. What's the thinking there beyond just getting bigger? Cost savings.
They're projecting about $500 million in annual cost savings, yes. But the bigger question, I think, is what this kind of scale means for innovation versus just, efficiency in a premature market.
Good question. Okay, staying with big tech moves, NVIDIA. They're already dominant in AI chips, and now they've announced something new.
Yes, NVLink Fusion. Reuters has the details. You can think of it as like a super connector.
Okay.
It helps other chip companies link their own processors together much more effectively, specifically for building these really powerful AI systems.
So NVIDIA isn't keeping it exclusive. They're helping others build using NVIDIA's approach.
Exactly. It's a strategic play. By enabling others, they're kind of embedding their technology even deeper, making their architecture the foundation for, well, potentially a lot of future AI development. It strengthens their dominance, ironically, by sharing.
Fascinating strategy. Solidifies their central role. Now let's talk about global manufacturing. Apple's making some adjustments.
Yeah, according to the BBC, Apple is shifting some iPhone production, specifically phones destined for the U.S. market, over to India.
This continues that trend of diversifying supply chains, moving away from total reliance on China.
It does. But there's a potential wrinkle. The BBC also mentions this new U.S.-China tariff deal. Depending on the specifics, it could actually influence how attractive investment in places like India becomes. So it's not straightforward.
Right. These trade deals create complex ripples. Okay. Sticking with AI giants Microsoft, they've spent enormous sums on AI. What's the focus now?
Profitability. After investing, $64 billion this year alone, Reuters reported that the focus seems to be shifting.
How so?
At their recent developer conference, the talk was about optimizing their own in-house AI services and, crucially, cutting down their reliance on external data centers.
Bringing more control in-house, making it more efficient long-term.
Precisely. It's about making that massive investment financially sustainable, more self-sufficiency.
Makes sense. Now, Qualcomm. We know them mainly for mobile chips, but they're looking at the data center again.
They are indeed. Reuters is reporting Qualcomm's re-entering the data center CPU market, and they're not just dipping a toe in.
What's the approach?
They're designing custom chips specifically built to work well with NVIDIA GPUs. It's a direct play into that booming market for AI infrastructure.
Targeting the AI boom directly, do they have partners lined up?
Yeah, they mentioned Meta and also a Saudi AI firm called Humane as key partners. It's a bold move, though, going up against the established players in that space.
Competition is usually good for the market. Okay, let's switch to telecoms. A big acquisition just got the green light.
Yes, Verizon's $20 billion deal to buy Frontier Communications has received FCC approval. NPR reported on this.
$20 billion! But there was a condition attached, wasn't there? Something a bit unusual.
There was. To get the approval, Verizon apparently had to agree to end some of its key diversity, equity, and inclusion DEI policies.
Hmm. That's a significant concession for regulatory approval. What's the upside of the deal for consumers, potentially?
Well, the main promise is a major expansion of Verizon's fiber network. They're talking about reaching into 25 states and connecting at least 1 million new homes each year.
So faster internet for potentially a lot more people. That's a tangible benefit.
Absolutely. Better infrastructure is always needed.
Okay, now let's look east. Xiaomi, the Chinese tech company, is making a big bet on chips.
A very big bet. The Wall Street Journal reports they're planning to invest nearly $7 billion over the next decade plus, specifically in chip design.
$7 billion, that's serious commitment. Are we seeing anything soon?
Apparently, they're unveiling their newest in-house chip sometime this week. It signals a real push for more technological independence.
And their stock has been doing well, hasn't it?
Extremely well, up over 50% year to date. That's driven by strong smartphone sales and also their growing EV business. Designing their own chips could boost both areas.
Interesting. Adds another layer to their growth story. Finally, on the corporate front, a European move in fintech.
That's Revolut. They're investing $1.12 billion in France over the next 3 years, again reported by the Wall Street Journal.
$1 billion into France. Why France?
They've chosen Paris as their new hub for Western Europe. They're even planning to seek a French banking license. It's a major signal of intent in the European market.
And they have big growth plans there, too.
They do. They want to double their French user base to 10 million people by 2026. It's all part of a wider European expansion, likely leading up to an eventual IPO.
Ambitious goals. Okay, lots of strategic moves across different sectors. Let's pivot now to earnings. What have we seen recently? Flowers Foods reported?
Yes, the bakery company. Their quarterly numbers came out via press release. Revenue was $1.55 billion.
How does that compare?
It actually missed analyst estimates by about $46 million, and it was down slightly, about 1.5% year over year.
And the bottom line, earnings per share.
EPS was $0.35. That also missed expectations by 0.02, and it's down almost 8% from last year. So maybe some challenges there, perhaps costs or demand related.
A bit of a miss for Flowers Foods. Okay, looking ahead to reports coming out today after the market closes.
We've got a couple. Keyfood technology analysts are expecting revenue around $615 million, which would be up about 7% year over year. And EPS is forecast at $1.72, a really big jump, over 60% year over year growth expected there.
Strong growth expected for Keyfood. Who else?
Trip.com Group. Revenue estimate is about $1.9 billion, up nearly 16% year over year. EPS expected around $0.86, which is more modest growth, about 3.6% year over year.
Okay, now tomorrow morning, before the bell, looks like a busier slate.
It does. We have Bilibili reporting. Revenue estimate there is $947 million. That's up almost 21% year over year. EPS expected at $0.07, though there isn't a direct year over year comparison available.
Who else is reporting Tuesday morning?
Eagle Materials. Revenue expected around $500 million, up almost 5% year over year. EPS forecast is $2.79, a nice jump of nearly 25%.
And the big one we mentioned earlier.
Right, Home Depot. Revenue expected at $39.2 billion. That's up nearly 8% year over year. But interestingly, EPS is expected to be slightly down year over year at $3.60, a decrease of less than 1%.
So revenue up, but profit per share maybe slightly squeezed. One more for Tuesday morning.
Viking Holdings. Revenue estimate is $841 million, strong growth of over 17%, but they're expected to report a loss per share of about $0.27.
Quite a mix there for Tuesday morning. What about after the close tomorrow?
2 more to watch. Modine Manufacturing. Revenue estimate is $633 million, up about 5%. EPS expected at $0.96. That's a solid increase of almost 25%.
And the second one?
Keysight Technologies.
Yeah.
Revenue forecast is $1.28 billion, up over 5%. EPS expected at $1.65, which is up a healthy 17% year over year.
Okay, plenty to digest Tuesday. And the rest of the week is busy too.
Yep. Just quickly, Wednesday we'll hear from Snowflake and Baidu. Thursday brings Workday, Ross Stores, and Williams-Sonoma. And Friday wraps up with Copart and Banco Santander Brazil.
Got it. A full earnings calendar. Finally, let's touch briefly on the IPO market. What's potentially happening this week?
Okay, kicking off potentially Wednesday, May 21st, we might see Ovafay Group, ticker OFL. They're an architecture firm.
Okay, number.
Trailing 12-month revenue is quite small, $386,000. And importantly, that revenue is down over 50% year over year. So some caution flags there, maybe.
Definitely warrants a closer look. What about Thursday? Looks busier.
Yeah. Thursday, May 22nd, could see Hinge Health, ticker HNGE. This is a digital health startup. Much bigger numbers here, $390 million in trailing revenue and solid growth up over 33% year over year.
Okay, digital health continues to be a hot area. Anyone else on Thursday?
MNTN, Inc., ticker MNTN. This is an ad tech platform. Trailing revenue of about $225 million and also showing good growth, up nearly 28% year over year.
Ad tech still growing strong then. And Friday.
Possibly Candle M Venture Limited, ticker FMFC. They're a contract manufacturer based in Cambodia, focusing on affordable luxury goods. Trailing revenue is around $14 million with modest growth of just under 4% year over year.
So a real variety of businesses looking to go public this week.
Exactly, from architecture to digital health, ad tech, and manufacturing.
All right, well, that covers a lot of ground for the start of the week. We've hit the market sentiment shift from the downgrade, the retail earnings anticipation, those big corporate deals like Charter Cox and Verizon Frontier, the AI moves from NVIDIA, Microsoft, Qualcomm, global shifts with Apple, Xiaomi's big chip investment, Revolut's expansion.
Plus all the earnings we just ran through and the upcoming IPOs.
It gives you, hopefully, a really solid picture of what's driving the market conversation right now. As always, this is your starting point. Dig deeper into what matters most to you.
Definitely.
And maybe a final thought to leave you with. We talked a lot about AI profitability becoming a focus for companies like Microsoft. How do you think that shift from just pure growth and investment to really focusing on the bottom line in AI, how will that change the competitive landscape? Will we see more partnerships or maybe even fiercer rivalries emerge in tech over the next couple of years?
Good question to ponder.
Something to think about. If you found this deep dive useful, please do subscribe to Stock Talk, share it with someone you think would benefit, and give us that like.
We appreciate the support.
Thanks so much for tuning in to this deep dive into finance. We'll catch you next time.